morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is November 14th, 2022. I'm going to go over your three threes for the week. It was a nice week in the market, and so we're going to go over the major asset classes, their performance, and our three favorites, and there has been a move this week, and how we are positioned on the short term. Are we buying, holding, or selling for both bonds and equities? And our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes and their performance for the week. U.S. equity markets closed out the week with a really nice large gains on Thursday and Friday after the October CPI number came out Thursday morning, and it reported a lower than expected rise in consumer inflation. It came down from 8.2 to 7.7, still high, but better than it was a month ago. This fueled the optimism that the Fed might ease or pause on its monetary tightening. That and the China possible second or third time now they've tried to reopen caused the equity markets to rally. As you can look from this chart, we got the S&P up 5.9, NASDAQ up 8.1. Across the board, they were all positive. They started taking profits from the areas that were actually up on a year-to-date basis, like in the US dollar and commodities. What can I say about Bitcoin? The week only got worse for the crypto markets after the FTX declared bankruptcy, and so prices for most of the major crypto coins lost major ground, and now they're sitting at down 63% year-to-date. Ouch. All right, let's go over the top three asset classes on a long-term basis for November 14, 2022. We still have T-bills and US dollar in our number 1 and 2 spots. Coming in at number 3 now are dividend equities. They just barely jumped commodities, and commodity sits in the 4th place. And a lot of that, so defense is still on the field and the primary driver of this market. However, the defensive, less volatile equities in this marketplace, the ones that actually have earnings, have good cash flow, are paying dividends, etc., are starting. That's where the money is kind of going, and so they're in our top 3. If you go back out about a year, we were on offense. We had the NASDAQ, S&P 500, and commodities in our top 3. All right, so let's go over our bonds on a short-term basis. On a year-to-date basis, right now, we still have a drawdown or negative performance of 13.9. We've been in and out of bonds a couple times this year, but the majority of the time we've been out. So we protected our clients' assets on the bond side. Now, we're still on the protect mode, so we're not necessarily nibbling, except we do have some bonds that are finally starting to hit our radar. So we'd like to see a continuation of bond prices going up, and so that we can start nibbling on the bonds. On the equity side, we have a year-to-date drawdown of 16%. It's been a very volatile year, lots of ups and downs. And if you look down here, you can look at when we went to protect mode into when we started buying on what we protected our clients, 3.8, 11%, 3.2, etc. And if you remember a couple weeks ago, I said we were nibbling. We were looking to add to selective equities a couple weeks ago. And so the market did rally off that, bounce back to support, and now we're actually, after last week, are seeing nice little gains in those equities that we started purchasing. So we shall see. We still have, it broke this latest support zone here, and now we got to see if it can come up here and see what it'll do in the 4,100 to 4,200 on that resistance zone. All right, let's go over the top 3 market movers for the week. We have retail earnings all week. A lot of big box retailers are coming out. Walmart, Target, Macy's, Home Depots, and Lowe's will all be reporting. So we'll get to see if the consumer is out there spending. We also have some of the top tech companies coming out, like NVIDIA, Cisco, Applied Materials, and Palo Alto Networks also reporting. Number 2 market mover for the week will be, again, retail sales, falling in the same thing with the earnings, but now we get the retail sales report from the Census Bureau for October. And right now we're showing the estimates to actually be a rebound for October, up 0.8, following an unchanged reading or 0% reading in September. The number 3 market mover for the week is not necessarily on the positive side, most likely. It will be coming on the negative side, and it's housing data. And a lot of that has to do with it's a lagging indicator. And a lot also, again, has to do with the rise in interest rates. Well, for October, we get to see housing starts and building permits. And both of them are showing the projections are for them to be lower than they were the previous month. And then on Friday, we have existing home sales for October. And again, the projections are to have fallen from 4.36 from 4.71. So some positives at the beginning of the week, some not so positives at the end of the week. We shall see what the week brings and how this affects the market. That's it for this week. Thank you again for joining us. Our next update will be Monday, November 21st. As always, continue to follow, like, and comment, and we will see you guys next week. Have a great week trading.